Hello everyone, my name is Ajit Sanosukumaran. Number metric is 265085. Today my group and I will be discussing about business income and losses. Our first subtopic is actually trading and adventures in the nature of trade. Before that, we should discuss about section 2 of the Income Tax Act 1967, which states that business is actually a profession, vocation, trade, and as well as every manufacturing adventure in the nature of trade, but excludes the term employment. A profession is actually something that depends mostly on intellectual skills. This is because it's an occupation that is related to one's skill and qualification earned through higher education. For example, like a surgeon, lawyer, and even accountants. In this case of IRC versus Maxi, the respondent was a sole proprietor, editor, and publisher of a monthly magazine. His revenue was mostly derived from the sales and even advertisements of the magazine. Prior to the war, the respondent wrote a large part of each number of the magazines, but when the war broke out, he greatly increased his personal contributions and did most of his writings. Therefore, he was assessed to excess profits duty. He appealed to the General Commissions that he was within the exception in Finance Note 2 Act of 1915 under Section 13(9). The General Commissions accepted his contention and discharged the assessment. It was said that the respondent was carrying out an ordinary commercial business, and there was no evidence that suggested that he was exercising a profession, and therefore he was accordingly liable to the excess profits duty. The respondent was both exercising a profession of a journalist and also an editor, in respect of which he was entitled for this assumption, in respect of which he was accessible to the duty. The profits of such profession and business were separable for excess profits duty, and therefore the arriving at the profits of the publishing business, a reasonable allowance must be made for his professional services. Next, we'll be talking about a vocation. Vocation is actually something that occupation in which a person is especially drawn or for which they are suited, trained, and qualified. This can be, for example, a carpenter or even an electrician. In this case of Partridge versus Meladine, a professional bookmaker systematically attended race courses for the purpose of carrying out that activity. The appellant attended races, make bets, and even earn profits under these circumstances, but they were not assessed to the Income Tax Act. The question of this amount of assessment was not raised, and the appellant was not prepared with any accounts of the profits, as they keep only one betting book which they destroy at each of the end of the year. They contended that they had no trade, profession, or vocation within the meaning of this act related to income tax, and the profits made by them were not legal profits or gains and were not accessible to income tax. They could not legally recover any amounts due to them in the respect of bets. Therefore, the decision was that the respondent contended that betting systematically and annually carried on came within the provisions of Income Tax Act as a vocation, and therefore the profits and gains were chargeable to tax. Next is we'll be talking about trade. Trade is something that involves commercial undertaking, of which the buying and selling are the most obvious characteristics. Now we enter into the subtopic 3.1.1, which states the meaning of adventure or concern in the nature of trade. Adventure in the nature of trade is actually a principle that is used to determine whether a transaction is a business nature or capital nature. Any involvement of isolated transactions or transactions that are outside the normal course of business can satisfy this meaning. Sometimes it does not even require a series of transactions. Even a single transaction that is out of the order of the business can satisfy this term. Now, in this case of E versus Comptroller General of Inland Revenue, the appellant had purchased jointly with 4 other persons a rubber estate near Seremban. The co-purchasers negotiated for the sale of this estate to a company which was a company who turns land into housing sites. The estate was eventually transferred to the company in consideration of the company issuing a fully paid shares valued up to 765,000. The appellant became entitled to a sum of 382,000 ringgit of dollars of shares. He was then assessed for additional tax under Section 10(1)(a) of the Income Tax Ordinance 1947. The appellant, however, failed in this appeal before the Special Commissions and the High Court, but he was successful in the federal court and his appeal was allowed. It was held that this transaction was an isolated transaction, and although it was an adventure in the nature of trade, it did not constitute a trade of the appellant within the meaning of this section. This was because, as it was a single business transaction carried out by the appellant and not part of any business by him, it did not constitute the meaning of this section. Therefore, the decision was that the profit arising was not subject under tax. Now we will be talking about badges of trade. Badges of trade is actually a method used by the HM Revenue and Customs to determine whether an activity constitutes a trade or an adventure or concern in the nature of trade. This is because if a transaction is not constitute a trade, it is not subject to tax. It will fall under capital. Now we are talking about profit-seeking motive. Profit-seeking motive is actually the appellant having an intention of making fraud that may indicate a trading activity. As evidence of trade is more assigned to a company or partnership is normally because companies are formed for profit-seeking motive. If an individual buys and sells at a profit and the transaction is isolated, he may regard it as merely realizing profit on capital investment. In this case of Insaf Tegar Sdn Bhd versus Ketua Pengarah Hasil Dalam Negeri, the appellant is actually a company that is involved principally in property investment. On 16 January 1997, the appellant purchased 50 acres of land from Legemas Sdn Bhd. The appellant disposed the said land to Mixel Malaysia Sdn Bhd by the way of deed of assignment, dated 16 March 2004 until and 24 May 2004. The appellant put a submission of tax return under RPGT. The respondent, however, issued a notice of assessment against the appellant income sum of 4 million ringgit Malaysia with a penalty in respect of the gains. The issue was that whether this disposal of land is a capital investment or a disposal of stock in trade. As the facts of this case goes, at the beginning, the appellant's intention was to follow the company's resolution, but his intention changed due to favorable market conditions where the land was assigned to a third party because to pursue the appellant's debt settlement exercise. Therefore, his intention changed to a profit-seeking motive. Therefore, the decision was that the court took into consideration that under these circumstances that the appellant clearly developed the land for purpose of profit. Therefore, the appellant has to pay a sum of penalty for the incorrect return, which he did was RPGT. That's all from me.
Assalamualaikum. My name is Rashafianti Zabidin and my metric number is 265428. I will continue to present about badges of trade. Secondly is period of ownership. The period of ownership of the asset will determine whether the acquisition of the asset is for trade or investment. The longer an asset is held, the greater the possibility that it was acquired as an investment. So, there is an element of trading if the period of ownership of acquired asset is shorter. The example case is ALF Properties Sdn Bhd versus Ketua Pengarah Jabatan Hasil Dalam Negeri. The issue is whether or not the land purchased by the appellant is taxable. The facts of this case is the appellants had paid 6.1 million for 7 lots of land, and after that, 10 years later, they had entered to the sale and purchase agreement with another company to sell 4 of the lots for 42.5 million. The appellants were assessed 30,185,916 in income tax on the gains from the sale. The argument for this case is appellants claiming that the gains were derived from the sale of an investment and it were not subject to income tax. There is a general question where it depends on the intention of the appellant when they bought the 7 lots of the land. If the 7 lots of the land are sold for the purpose of making a profit, the profit will be subject to income tax. The judgment for this case is the appellant will be exempt from tax. This is because when profit derives from the sales, they are treated as capital assets, so it will exempt from tax. Besides that, the appellant's ownership of the property for more than 10 years is a clear indication that the appellant purchased it for the investment purpose. Number 3 is method of finance. This method of finance refers to the determination or how the funds or source of financial is obtained. For example, if someone needed a loan to buy an asset that he or she would not have bought it, if he or she were an ordinary person and could not afford to repay the loan without generating income from it, this indicates a desire to engage in trade. Example case is Lim Fo-Yung versus Comptroller of Inland Revenue. The issue is whether the surplus is the result of the respondent's business activities or it is merely the realization of the investment. The facts of this case is the respondent had purchased 5 pieces of land at Kuala Lumpur and the respondent had built a hotel on the site at the cost of 2,377,490, of where 2 million was borrowed from the EPF board, to which the hotel and its lands were charged. The respondent had made an agreement with the EPF board to sell the hotel and its land to the board for 5 million. The difference between the cost of the building and selling price give a surplus of 2,622,510. The respondent had sold to the hotel company the right and his rights to repurchase the property. The sale of the repurchase rights was at a consideration of 4,201,000. These considerations are considered to be taxable. The Special Commissioner states that it was a transaction that designed to raise finance over a fixed period on capital asset. Special Commissioner applies the correct legal test and reaches the conclusion that it is the result of the respondent's business activities. The judgment is the excess was a taxable profit from trading. This is due to the fact that the property's value exceeded the cost of acquisition. Number 4 is development or processing of asset. When an asset is processed again, it indicates that the asset is being traded. It means that a trading venture will be exist when a person makes an acquired asset more marketable by doing additional work or modifications before selling it. The example case is Cape Brandy Syndicates versus Inland Revenue Commissioner. The issue is whether the profit from recasket wine is taxable. This case is about the appellants, which are the 3 members of a wine trade firm, had entered into an oral agreement to form a syndicate. Their main aim is to obtain a quantity of brandy from the Cape government as a speculative purchase for sale on their joint account. The brandy was purchased for 3 installments from a Cape Colony agent. A small amount of the brandy was sold on commission by the said agent, and the rest was shipped to the United Kingdom, where it was blended by the members' firms with fresh brandy purchased by the syndicate. Then they had recasted it and sold it into the markets. The appellants argued that they engaged in a single speculative transaction that did not qualify as a trade or business under the Finance Act 1915, or that if they did, the profits earned after 4 August 1914 were not subject to excess profit duty. Special Commissioners determined that the profits in question arose from appellants' trade or business, and that excess profits duty was chargeable on them. The judgment is the court held that it is a trade because the transaction was a trading transaction, hence the income will be taxable. Besides that, according to the true interpretation of the Finance Act 1915 and subsequent acts, any trade or business started after the outbreak of the war was subject to an assessment of excess profits duty. Number 5 is nature of the subject matter. The intention of the acquisition at the time the item is acquired is important in determining whether a gain is capital or revenue. If the intention is to resell the subject matter for a profit, the gain is a revenue in nature and it is subject to taxation. For example, the item acquired could be for a personal use, but if it is acquired in a large quantity, it is obviously point to an intention to trade. The example of the case is Rutledge versus Inland Revenue Commissioner. The issue is whether the profits were liable to assessment to income tax. This case is about the appellant who is a moneylender and who was also interested in a movie theatre in 1920. In Berlin in 1920, on business with the cinema company, He was offered the opportunity to buy a large quantity of toilet paper for a very low price. He completed the purchase and, upon his return to the United States, he had sold the entire consignment to one person at a higher profit. Commissioner states that the appellant bought the toilet paper in a large quantity, an act which is not part of his normal business. It was said that, as the purchase was made for no other purpose except that for resale at a profit, thus the deal was in the nature of trade. The judgment is, the commissioners concluded that the profits were liable to income tax and excess profits duty assessment as profits of a business in the nature of trade. The profits has become taxable. This is because he buys toilet paper in large quantities and that is not for personal use and it is also not part of his normal business. Number 6 is circumstances leading to realization. The situations leading to the sale of the property is an important consideration. There will be an element of trade if the sale is meant to realize a profit. The example of the case is Penang Realty Sdn Bhd versus Ketua Pengarah Hasil Dalam Negeri. The issue is whether the compensation received by the appellant as a result of compulsory acquisition of a portion of their land is taxable. This case is about the appellant that had bought two pieces of land, namely Hans Estate in Penang and Hans Estate in Perak. The evidence shows that a portion of the subject land was compulsory acquired by the government in August 1980. In May 1982, the appellant was paid the sum of 1,035,762 as compensation, where IRB sought to tax the said compensation and accordingly assessed that sum. The appellant was unhappy with the assessment imposed and appealed to the Special Commissioners of Income Tax and it was dismissed. The appellant claims the property was forced sold to the developer because the appellant's members did not take up the lots that were supposed to be sold to them. The appellant had no choice but to sell to the developer in view of the predicament in which it found itself and the inability of the appellant to raise funds from banks or financial institutions to finance its housing project of which the beneficiaries were its members. The Court of Appeal decided that the proceeds received by the appellant, Penang Realty Sdn Bhd, were not subject to income tax. The Court of Appeal had upheld the appeal, ruling that the government's compulsory acquisition of the appellant's land could not be considered a sale with taxable proceeds because the element of compulsion vitiated the intention to trade.
Hello doctor, my name is Madan Raj. My measure number is 264172. Today I would like to explain about illegal trading, hobbies and gambling as well as mutual transaction. Let's start the presentation. Illegal trading. Illegal trading is strictly prohibited in Malaysia. Illegal trading is the intent of illegality or wrongdoing associated with income. Profit or gains is immaterial for the purpose of taxation. Under Section 4 it does not distinguish between a legal and illegal business income. Notwithstanding, its illegal character is still taxable if it has the characteristics of business income. Expenses of illegal business are also deductible. For example, medical expenses are denied a deduction if they are illegal. The chargeability to tax is not negated just because the source of income stemmed with illegality, assuming one can establish the existence of a business. Any losses arising from the unlawful activities will be allowable, which means it's taxable. So let's see the cases. So this is a Malaysian case, Luno Pte Limited and other versus Robert Ong Yan Cheng. It's about digital currency. This case seems very interesting because it's a nation first digital currency court case, and the case is seems vital because our court had decided for the first time ever that cryptocurrency trading is not illegal in Malaysia. Digital currency is a form of an intangible asset, and digital currency is a thing that has to be returned if it is mistakenly delivered. Let's see the summary of the case. The plaintiff had mistakenly transferred bitcoins to the defender, and the former wants the latter to return it. The plaintiff in this case is Luno, while the defendant in this case is Robert. The defendant, on the other hand, claimed that he is unable to do so as he no longer has it. Well, when the plaintiff asked him to return back his bitcoins, the defendant refused to do it as he doesn't have the bitcoins with him. Unlike the usual tangible products, this is a case which deals with digital currency which has very volatile value. The plaintiff had also demanded that if the defendant is unable to return the 11.3 bitcoins, he had to pay the sum of 810,837 ringgit equivalent to 11.3 bitcoins, calculated based on the Luno exchange market price of 71,756 ringgit per bitcoin at the time of the filing the action. While the court held that, among others, cryptocurrency trading is not illegal in nature. If the currency is a form of an intangible asset, and digital currency is a thing that has to be returned if it is mistakenly delivered. The matter now is pending at the Court of Appeal. The case is still never resolved yet. So, adding to this, let me explain about some input of this case. Under Section 73 of the Contract Act states that a person to whom money had been paid or anything delivered by mistake or under caution must repay or return it. The appellant in the case contended that bitcoins are not a thing capable of being returned under Section 73 of the Contract. Hobbies and gambling. Hobbies. A business may arise as a byproduct of a hobby or another non-commercial enterprise. It can give a rise to tax. While gambling, gains or losses may be taken into account in calculating assessable income. It also can be brought into scope of charge if it's shown that there is nature of trade, betting, and associated activities have been the subject of case law from time to time. Okay, let's see the case. Win Rizal Macau versus Po Yang Hong. Well, this case is very interesting because a non-citizen won against a citizen in Malaysia. So this case is about, is a gambling debt illegal and unenforceable in Malaysia? The case is the plaintiff is a licensed casino operator in Macau. The plaintiffs offer credit facilities to patrons with sound credit ratings. Okay, sound credit rating is about measurement of your past repayment history on debts. The defendant is a Malaysian citizen, which is Po Yang Hong, who is ordinarily resident in Malaysia and gainfully employed in Malaysia. The defendant is a seasoned gambler with a high credit reputation. During many of his visits to the plaintiff casino, the defendant was able to obtain substantial gaming credit facilities to gamble at the casino. Defendant had taken a line of credit worth 40 million Hong Kong currency but had only paid back 7 million Hong Kong currency before Win Macau launched legal action to reclaim the remainder in 2017. He will now have to repay that amount plus interest. Defendant had said at an early court hearing he was not aware he had signed a credit agreement and that he did not owe the casino 40 million Hong Kong currency. the court held that the High Court dismissed the defendant appeal. The defendant application for leave to appeal the federal court is allowed. We will await further guidance or confirmation on the law by the federal court. Well, this case also still pending because the defendant is appealing to the federal court. Moving to the next. Next is mutual transactions. Under the mutuality principle, a man cannot trade with himself and make a profit out such a transaction. The mutuality principle therefore rests on two concepts that we need to emphasize. A person cannot trade with himself. The surplus or contribution over expenditure is not income. In nature, some mutual kinds of undertakings are partially exempted from tax under Schedule 6 of the Act. For example, cooperative societies. See para 12 and 12 capital A of Schedule 6. This information you can obtain from IRBM. Registered trade unions which are exempt from tax on all income other than income consisting of gains and profits from a business carried on by the union. You can see para 17 of Schedule 6. Other concepts are not specially covered in the Act. For example, clubs and society have to be dealt with on the general principle outlined above. Malaysian Bar versus Ketua Pengarah Aksiran Negeri. In this case, the taxpayer was a body corporate established and functioning under the Legal Professions Act. The issue involved its tax status, whether various contributions or subscriptions from members were taxable. The IRB had treated the taxpayer as a trade association. It was agreed by the parties that if NB was not a trade association, the principle of mutuality would apply. Among the matter raised and decided by the Special Commissioner, one decision was that Malaysian Bar was not a trade association under Section 53 of the Act. To determine a trade association, two important ingredients are: there must be an association of persons. Second, the association of persons was formed with the main object of safeguarding or promoting the business of its members. Hence, High Court also held that Malaysian Bar was not a High Court association.
Assalamualaikum and hi, my name is Nur Ashanandra binti Suhaimi and my metric number is 264372. I will present the speculation part in the illegal trade and activities under the Income Tax Act 1967. So, do you know what is speculation in business income tax? Speculation is a distinction has been drawn between gambling in the form of betting and the somewhat similar activity of speculation in commodity futures. In the latter case, the speculator may enter into real and enforceable contracts which, from the point of view of the other party, are ordinary commercial transactions. The question of whether and in what circumstance profits from such transactions are accessible is a complicated one. In certain commodities which are subject to price fluctuations, let me give an example. The cotton and rubber. It is customary for dealers to enter into contracts of purchase and sale for future delivery. A rubber dealer might agree to purchase a specified quantity of rubber, the quantity of rubber in 1 month's time, before the month had expired. However, when he would have had to take delivery and pay for the purchase, he would arrange to sell it. As a result, he would never take physical possessions of the rubber, and if during the month the price had fallen, he would only find himself liable to pay the difference between the sale and purchase prices. On the other hand, if the price has risen between the dates of purchase and sale, he would then become entitled to receive the difference, thus making a profit. Merchants dealing in commodities may and do enter into such futures contracts as a hedge to protect themselves against violent fluctuations in the price of the commodity. On the other hand, speculators who have no intention of ever taking delivery of the commodity but merely wish to gamble on a rise or fall in the market also enter into contracts in futures. In the conclusion, as long as such transactions are carried out by a person involved in dealing in the specific commodities or connected with the trade in such a commodity, the gains made on such speculative transaction would generally be taxable as a business profit. So, the issue are whether profits on this transaction is income nature and liable to tax or merely the result of gambling or wagering transactions. The first name of the case is Director General of Inland Revenue versus Central Sugar Berhad. The issue is whether part of the business of sugar refinery income tax is taxable. So the fact of the case is the taxpayer enjoy the status of pioneer industry during which time 1st January 1968 to 31st December 1972. The time period is 5 years. Its profit were exempted from income tax. The revenue, however, sought to levy income tax on profit derived from hedging, an operation consisting of forward sales and purchases of raw sugar. The special commissioners were of the opinion that the taxpayer was neither speculating in the terminal sugar market, nor was it engaged in activities amounting to a separate business. Hedging was necessary for the purpose of stabilizing and lowering the cost of the raw sugar used by it in its production of refined sugar. The question before the court was whether the special commissioners were right in law in coming to this decision on the facts as found by them. So the first argument is the court will interfere only if the case contains anything ex facie which is bad law and which bears upon to this determination. The second is the special commissioners were justified by the facts and evidence in arriving at the conclusion that the terminal transaction entered into by the taxpayer were not merely speculation but hedging operation which form part of its business as sugar refiners. The judgment and the reason is a company has enough sugar supply for future. When the contract happened, it is taxable. However, it got pioneer status incentive, not taxable at the time. Next, I will continue with the second case. The name of the case is Copper versus Tubbs. The issue is whether profit or losses on such transaction are of an income nature and liable to tax. In this case, the respondent being connected or having been connected with a firm of curtain brokers and merchants was minded to make, over a large number of years, a series of speculations by way of buying and selling futures in curtains, not with a view to reserving or delivering any curtain, but with a view to closing the transaction and making a profit if he could, and with the necessity of paying the loss if he made a loss. So, the argument is how far the courts could interfere with finding of fact made by a lower court had not been fully settled. These include cases where the commissioner's decision did not seem reasonable based on the findings of fact. In the Court of Appeal, Pollock Mr. disagreed with the majority view and held that the special commissioners had misdirected themselves and that the profit were taxable as trading income. Pollock Mr. did not rule out that the profits could be taxed as miscellaneous income, but his view that they were taxable as trading income. The judgment is partner in curtain broker want to buy curtain at lower price and partner claim it is gambling. The second is held that contract is real and profit arise from that is an income and taxable. The last case is winnings from 3-digit forecast pools and gold speculation. The name of case is PKR398. It happened in year 1987. The taxpayer was an illegal bookmaker and he placed bid on horses. He was also involved in gold speculation in Hong Kong. His wife has some winnings from 3-digit forecast pools. The decisions income from illegal bookmaking are winnings from horse racing are taxable. However, his wife winning from 3-digit forecast pools are not taxable. Taxpayer involvement in gold speculation overseas was held to be income in nature and if remitted would be taxable. So that's all from me. Thank you.
Good day to Doctor. I'm Malika Sigamani. Metric number 265625 would proceed with the gross income from a business. So under section 22 subsection 1 ITA 1967, it is stated that gross income of a person is derived from a source of his for the basis period for a year of assessment. Whereas under section 22 subsection 2, the gross income of a person also include any amount that is going to be received by a person or should have been received for that basis period in relation to the source by way of such as insurance, indemnity, recoupment, recovery, reimbursement, and compensation for loss of income as well as a rebate under section 6. So in this case of PSB versus Ketua Pengerhasil Dalam Negeri, the issue is whether the compensation received by the appellant due to the breach of contract by Sabah State Government is revenue in nature and is taxable under the section 22 subsection 2 Income Tax Act 1967. First and foremost, the appellant paid a certain amount of premium on 7 March 1995 upon the offering of land by the Sabah State Government. Later on, he also did receive a letter from the Office of the Chief Minister on 8 June 1995, which encloses the land allotment period from 1st November 1996 till 1st November 1998. And at last, land need to be handed back. Upon the letter, the appellant also applied for an extension of period which is till 1st November 1999 and it was rejected by Sabah State Government. Later on, the appellant also filed an action due to the breach of contract on the failure of state government to renew the toll and logging licenses and successfully received compensation including interest from the Sabah State Government, and the compensation was taxed. The appellant was not satisfied and he further argued that the compensation received was just an acceptance of capital and not a sale or commercial transaction done in the ordinary course of business, as well as stated that it should not be taxable under section 22 subsection 2 ITA 1967. To conclude, the High Court dismissed the appellant's appeal at a cost of 3,000 ringgit Malaysia and agreed that the receipt of such compensation including the interest is the receipt of revenue which subject to the ITA 1967. So for the case Karapak Holdings Limited versus Federal Commissioner Tax 1967, 115 CLR 653, it is stated that in this case, the appellant took a blanket death and disability policy in respect of its company employees, and later on an employee was killed in an accident, and Carapac Holdings Limited received $10,000 pursuant to the insurance policy. To conclude, the Australian High Court held that such insurance recovery was a revenue received and it is taxable under Section 22 subsection 2 ITA 1967. Whereas the compensation is also might exempted if the insurance recovery is for capital asset. Next, under Section 24 subsection 1 ITA 1967, the business income of a person also include the debt arising from the sale of stock, provision of services, from the use of property in relation to business, drawings, dividend income of share dealing business, interest income, and as well as market value of exported goods. So in the case of OIB versus KPHTN, the issue is whether the respondent has any legal basis to bring the payment for project management fee costing $19,500,000 to income tax in the year of assessment 1999. First and foremost, appellant in this case manages the construction project of Malaysia-Singapore Second Crossing MSSC and also had entered into an agreement with United Engineering Berhad and Link Kedua Berhad on 19 January 1995. Further, the respondent found that the MSSC project had been completed in 1998, but there were two invoices dated 24 December 1999 and 26 April 2004, totaling $19,500,000 were issued after the completion of the project. In conjunction with the appellant also declared the total management fee of $60,200,000, which was 7% of the estimated total tender of $860 million in 1999 and the payments for two invoices in 2000. Later on, the appellant was not satisfied and he also argued that the findings made by SCIT, which states that appellant had received the project management fee of 80,971,764 ringgit Malaysia as at 31st December 1998. He also then stated that the balance of 19,473,324 ringgit Malaysia were claimed through the two invoices dated in these two dates were not for post-construction works but were for services rendered in the year 1998. Therefore, it should be recognized in year assessment 1999 pursuant to the Section 24 subsection 1B of the ITA. As a result, the SCIT and Court of Appeal has dismissed the appellant's appeal, although he had that it was not his negligence in not correcting the written form for year of assessment 1999. As for the last part, under the Section 30, it is stated that business incomes also include bad debt recovered, refunds of payroll tax, release of debt. That's all from us. Thank you.